Welcome to this keynote session, forming part of the 12th Annual Analysys Mason Telecoms Summit. My name is David McElroy, and I work as part of Analysys Mason's online events team. Now, you may have already watched some other sessions leading up to this one. However, I just wanted to remind you of a few points that will help you to get the most out of this and all of our other summit presentations. Firstly, please remember that all sessions are available on demand, meaning that you can access them in an order and at a time and a date that suits you. We have a selection of keynote and breakout sessions for you to choose from, and you can access all of them via the event homepage. Once you have entered your chosen session, you have the ability to connect and contact the presenters, access and download useful resources, and submit questions. Now, please keep in mind that as these sessions are on demand, if you are to submit a question, either the presenter or a member of our team will get back to you directly by email in the coming days. Now, once this session has ended, you'll be automatically redirected to the event homepage, where we would welcome you to choose another session. And now I have the pleasure of introducing Tom Rebeck. He is a partner in our research division. Tom, over to you when you're ready.
Great, thank you, David. So in this session, I'm going to be talking about where service revenue come from for telecoms operators. And I wanted to start with this quote from Alfred Sloan. So, growth or striving for it is essential to the good health of an enterprise. As you may know, Sloan headed up General Motors from the early 1920s to the 1940s. So obviously this included the rise of GM during the 1920s when it became one of the biggest companies in the world, and through the much tougher years in the 1930s. So I think it's a good quote. It's not saying that enterprises have to grow. And he knew, obviously, from his experience during the Depression that wasn't always possible. But striving for growth is something that enterprises should always do. It isn't enough to accept flat or falling revenues. Businesses should be trying to grow. Now, that has obvious relevance for the telecoms industry and the sector. The situation in the sector in Europe is pretty clear. There's been no real growth for the past decade. Overall, I mean, obviously there are exceptions. Some countries have done slightly better. Some operators have done better than others, but overall the market's fallen. And to make matters worse, there are no obvious routes to growth. So 20 years ago, increasing penetration of mobile and take-up of broadband meant that all operators could be fairly optimistic about growth. Now that clearly hasn't been the case for the last decade or more. But despite all of that, I think operators should still be striving for growth. And that's what I want to focus on during this presentation. And look at some of the options, some of the ways that operators can grow their revenues. So I'm going to break that into three different categories. Firstly, looking at the consumer market. So here we think more growth is possible in the consumer market, both from connectivity products, but also from selling other services. Secondly, we'll look at some of the more radical options that are open to brave, committed operators. Though, as I say, they are radical steps, and they mean moving into different areas, different vertical markets. And thirdly, we'll talk about the business division for operators. So business divisions have done pretty well already, increasing service revenues from new products. And there's plenty of scope for that to continue. So we'll talk about that. And then right at the end, we'll touch on 5G. So clearly one of the aspects of future growth is about making more money out of 5G services. But that needs thought about packaging and pricing those capabilities of 5G, particularly 5G public networks. And that hasn't had a huge amount of attention so far. So we'll talk about that a bit at the end. Before we talk about the different options, though, let's look at the numbers. Let's look at how the telecom sector's done in the last 10 years. So this chart is showing the spend on consumer telecom services in Europe from 2012 to 2021. Crucially, it's important to make the point, these are in real terms, so these are in 2021 prices. Quite often we look at telecoms revenue in nominal terms, and that tends to flatter the picture somewhat, flatter the sector somewhat. But as you can see here, in 2021 prices, real spend on telecoms has gone from just under 150 billion in 2012 down to 127 billion in 2021. Now, growth, there was a little bit of growth between 2015. You can see that 2015, 2016, 2017, there was a little bit of growth there. And obviously, there's going to be some impact of the pandemic in the past couple of years. But I think the decline in spend is pretty clear. It's a pretty clear long-term trend. Now, arguably, this isn't so bad. I mean, despite being, as I said before, it's essentially a saturated market. There's strong competition, regulatory pressures. Spend hasn't collapsed; it's just gone down slightly. So maybe that not so bad, but still, it's not the growth that Sloan was talking about. So that's the consumer sector. If we now look at the business numbers, and you can see here that the spend on the telecom services by businesses has held up slightly better than the consumer figure. There was a big decline 2012, 2013. Since then, it's been hovering around the 70 billion mark. And again, these numbers are in 2021 prices in real terms. I think the interesting thing, though, is to dig down the level beneath it with the business services, just to see how the composition of those numbers have changed. So we'll go to the next chart. So the totals will add up to the same figure, around that 70 billion that I was talking about. But here it's split into the connectivity and voice revenue. So those are the numbers at the top, the 76, 69, 66, and so on. And then underneath in the red figures, you've got the IT services. I mean, broadly speaking, IT services. So things like security, cloud, and so on. So we can see that the spend on connectivity and voice has fallen very sharply. Now, most of that is down to the decline in voice spend. So that's gone from 76 billion in 2012 down to 56 billion last year. So a drop of over 25%. As I say, most of that due to the decline in voice spend on connectivity. It actually held up reasonably well, sort of fairly constant. But there has been a big jump in the spend on these other IT services of cloud and security and so on. That's gone from the 5 billion back in 2012 to 12 billion by 2021. So a big increase. So operators were able to generate this big increase in revenues from the new source over the course of the decade, admittedly from a fairly low base, but still quite promising. I think it also bodes well for future growth. The decline, as I say, in the overall figure was mainly down to the drop in voice revenue. That's largely bottomed out. That was the switch from PSTN to legacy voice revenues. That's largely seen itself through, that washed through the system. It's going to be more consistent, flat. Same with connectivity growth. Connectivity spend should also be relatively flat, but we're expecting to see a continued increase in that IT spend. I think, aside from the actual numbers, that maybe the bigger point is that these numbers show that operators, when they do strive for it, they can achieve growth and considerable growth. So there's that IT spend, considerable cause for optimism. So now I want to talk through the three options. As I said, we'll start with consumer, then I'll talk about the more radical options of going into different vertical markets, and then talk more detail about what's happening with business. But starting off with the consumer spend. So I want to turn back to consumer and look at how and where future revenue growth from consumers can come from, starting with mobile. So I think there is more growth to come from current subscribers. And a key part of that for mobile operators is to move customers onto higher rate plans for slightly higher prices, the sort of more for more strategy. So here I'm showing the status of that based on the consumer survey that we've just completed. So this chart shows the share of customers that have at least 30 gigabytes in their monthly mobile plan. So on those larger plans, also any unlimited plans is also included in the chart here. So you can see that the share of customers on those very large plans varies from just 12% in Germany on the right-hand side to just over half of customers in France. Now, there's clearly probably a limit to the share of customers that are going to want a plan as large as this. The French data suggests it's certainly over 50%. I think it's probably as high, maybe, or even higher than 75%, perhaps even a bit more. The highest we've seen is in Finland, where 82% of customers are on unlimited plans. So mobile operators still have scope to move customers onto these larger plans, and that should, as a minimum, help protect the ARPUs, and may also be able to increase ARPUs as well. Now, obviously, the challenge longer term will be for operators to raise spend for the customers who are already on these very large or unlimited plans. and that's especially going to be an issue for operators like those in France or the US, where so many customers are already on those highest, already on that highest tier. So Vodafone, very proud in its most recent announcement to have 78% of its customers on unlimited plans. Now that's good for them in the short term, but clearly it's going to make growth longer term more difficult. They will have to push customers onto higher speed plans, onto premium plans, and so on. Most operators, though, I think in Europe have some way to go to reach that sort of 3/4, 75%, 80% threshold. So you can see there's still plenty of potential for upselling customers in the UK, Sweden, Ireland, and so on. So the short-term prospects for upselling customers look pretty good. Now let's turn to the fixed equivalent of this opportunity with the fixed speeds. So this data, this chart is showing us the percentage of fixed customers with a broadband connection of at least 500 megabits per second. Again, this comes from our survey that we've just completed, and this and many more reports coming in the next month or two. So here you can see that only a minority of customers are on those higher speed or those higher speed connections. Numbers highest on the left in countries like France and Spain, where there's already a lot of fibre and a lot of competition between the different fibre operators. But it's lower in the other countries, so lowest in the UK, where under 10% of customers are on those higher speeds. Now, as with the mobile plans, we can't expect all customers to move to the top tier plans, but certainly more than a third, probably more than a half of customers will take these plans in the longer term. So the main message here, I think, is similar to with the mobile connectivity. There's plenty of scope for operators to move customers onto the higher plans and charge slightly more for those plans, or at least use the move to faster connections as a way of justifying pricing increases. As with mobile, the challenge in the longer term will be to keep on selling connectivity once that high speed threshold has been met. Once customers have a gig, can you upsell them to even higher speeds, or do you look to other services? And that probably means that future revenue growth will be easier to achieve for the companies, for the operators in countries in the right-hand side, in Germany, Sweden, Norway, the UK, than it will be for France and Spain. So now I want to turn to some of those opportunities beyond connectivity and look at how operators can increase revenue without relying on upselling connectivity services. Now, I mentioned earlier on that the business divisions of operators had done a very good job over the last 10 years of increasing IT service revenue. And those business divisions have done that essentially by becoming aggregators of services from different providers, from different technology vendors. And I think there's an equivalent role for operators to play in the consumer market. They've already done that to an extent with pay TV services, more recently with streaming services, but there are other services that they can, other products that they can add to the basic bundle or the basic packages. And we listed some of those on the right-hand side, things like connected home security, better Wi-Fi, TV, gaming, and so on. I think there's more that they could do in adding these services, particularly by applying some of the lessons that they could learn from the business division. So I think those lessons are fairly simple. So firstly is to offer a broad portfolio of different products and services. The second point is to take products developed by others. The solutions don't have to be developed or created in-house by the operator. Mostly we're talking about services that will be relevant to all countries. So if we're talking about better Wi-Fi or in-home security or whatever, they're obviously going to be relevant in all sorts of different countries. It probably doesn't make sense for an operator to develop them internally itself. It probably makes sense to buy them from others. The other thing that I think businesses divisions have done that the consumer divisions could copy is just having a lower threshold for success. So the business divisions, when they're selling cloud or security or whatever, they're not trying to sell those products to all of their customers. They can be happy if only 5% or even 1% of the customer base takes any of these products. And again, products aren't developed by the operator, so the risks are going to be lower. Now, we have heard from operators talking about consumer products that they've had to kill successful products just simply because they were only taken by a small share of customers, even if the products were growing and were profitable. But with a business as big as consumer telecoms, few individual products are ever going to add up significantly to the revenue on their own. The revenue growth will come from adding multiple products. The next point is around experimenting, being open to experiments. Clearly, if you have a broader portfolio of services, many of which only appeal to a small minority of customers, operators need to be willing to experiment, be flexible about adding and removing services, about playing with different pricing strategies and so on. And they probably need to be bolder with this sort of experimentation than they have been in the past. Now, those are the things that operators should learn from the business divisions. Now, not everything is going to be the same. There are some differences in the approach from the business division. So most business products are sold for an extra fee. That's probably not the case in the consumer market. Bundling additional services into premium plans is probably a better approach than charging a different fee, but that will probably depend on country to country. The last point on this chart on the left-hand side is about consumer divisions leveraging the investments made by the business divisions. Now, the operators already do that to some extent. So quite often things like modems that are used for consumer broadband are the same as those used for very small businesses. But I think there's more that can be done there. So for example, if you're looking at basic products for mobile endpoint security, basic mobile security products, the same basic product is sold to a multinational as could be sold to an individual on a prepaid contract. It's the basic same service. So operators are already selling those sort of mobile security plans to products to large businesses. So why not also sell them to consumers? Network Edge is another example where investments can be leveraged for consumer services. So the initial push behind those Network Edge investments is very much for business products, but longer term, much of the opportunity will be from consumer services. And not just mobile services, also fixed services. So gaming is an obvious example of that in the near term, metaverse maybe in the longer term. So I think there's more that operators should be doing and thinking about in terms of leveraging the investments across business and consumer. And the distinction between business and consumer is blurring anyhow. And there are many opportunities in B2C, but also in B2B and B2B2C and so on that are related. And operators should be thinking about those in the round and not in isolation. And we'll talk about those more in a minute. I wanted to talk about an example of an operator that's done that and has able to incrementally increase revenue from consumer services. So here we have Comcast. So Comcast has taken that approach of adding features and adding products to justify prices in its broadband service. So as you can see from this chart, over the 4-year period starting in 2017, it's taken broadband ARPU from $56 in early 2017 up to $68. And you get some sense of how Comcast has been able to do that on this chart. So as a central part of their message is their better Wi-Fi products and their high quality Wi-Fi. And they've used that to justify the fee that it charges for the modem. They've also expanded on that message, selling additional Wi-Fi routers. It's introduced in early 2019, introduced a security product for $5.99. Later on, that was bundled into the price of the router. And that approach to security is probably part of its experimenting. The initial price allowed it to both test the demand, but also to help establish the value of security. So when it was bundled in to the standard package, the idea in consumers' minds that it was worth $6 was probably well established, and that was supported by marketing campaigns and so on. So what I've talked about in the past few slides is about the consumer market and how operators can incrementally increase revenue from those consumer services. Now, I want to look at something more radical and more radical opportunities for growth. I think it's clear there are some opportunities in the consumer service. They're not going to change the trajectory of growth. So now I wanted to look at some more extreme options for operators. So there are clearly opportunities for operators in different vertical markets, but only for operators that are bold and willing to take a substantial risk and very much take a long-term view. So you can see some examples on the right of where various operators have been active, obviously financial services, banking and wallets and insurance, but also healthcare, education and advertising. And these are all things that we've written about over the past few years. There's plenty of reports and articles in our research portal if you want to read more about those topics. Perhaps less common are the other two areas such as agriculture and e-commerce, but again, these are areas that some operators have been involved in. Clearly, it's quite a wide-ranging set of topics, but I think there are some common themes. So firstly, they're all very large markets, and markets that are mostly in need of modernization or digitization. So just on the example of banking, I got a message from my bank recently encouraging me to switch off text messaging. It said that text messages or SMS messages were low tech, which I thought was a bit rich coming from a sector that still relies on checks. I think we're also aware of the challenges facing sectors such as the healthcare and the need to use technology to increase productivity. The second point about all of this is that these sectors are hugely complex. They have very high barriers to entry, not just in terms of the investment required, but also in terms of regulatory barriers and potentially in terms of political barriers as well. Many of these markets are also nationally bound, or at least have quite specific local requirements for regulation and so on. And that will all mean that it's harder for global companies like the hyperscalers, like the Amazons and so on, to enter the markets. And also the scale required also makes it very difficult for smaller startups that like to be dissuaded from attacking these markets. All of which these high barriers to entry mean that it is a well-protected opportunity for anybody willing to get over those barriers. And I think that's part of the thinking with telecoms operators. So yes, there are some real challenges, but by getting into the real challenges for others to get into this market, but once you're in, you're actually in quite a well-protected market. The opportunities obviously cross the boundaries of consumer and business. KDDI, a Japanese operator, an example of that. It has an English language service, which it sells directly to consumers, but also sells to businesses. In a minute, I'll talk about what Telus is doing in healthcare, but it and Telstra are both selling to a range of different parties. They're selling to the healthcare sector directly, they're selling to consumers, they're selling to businesses, and so on. I don't think there's any hiding that these are big long-term bets. There are ways of minimizing the impact, ways of minimizing the investment required through partnerships or by starting with relatively small initiatives, at least initially. But to attack the largest of these opportunities, there's no getting away from it. It's going to require very large investment, probably hundreds of millions of dollars, if not billions of dollars. There's also a high degree of risk, and I mean, after all, there's good reasons why these markets haven't modernized before, and any investment is going to take years to come to fruition, probably more than a decade, and that's difficult proposition for a CEO who's looking to boost returns and boost the share price in the near term. So I think for all of those reasons, I don't expect most operators to seriously consider heavily investing into these new vertical markets, but the point is to make the point I want to make is that these opportunities do exist. They are out there, and there's some operators are tackling them already. So let's give an example by looking at Telus, the Canadian operator, and seeing what it's doing. So here, this slide talking about Telus's health initiative. So obviously healthcare, digital healthcare, it's an area that's got a lot of focus over the past couple of years with the pandemic. Regulators, patients are much more willing to accept things like remote consultations than they were before COVID. But the interest that Telus has had in healthcare long predates this. It first opened Telus Health back in 2011. And you get some of the idea of the scale of the investment and the scale of the unit from the numbers here, the level of investment that it's made over the past 10 years. So I've estimated it's well over $4 billion spent on this investment. They've got over 10,000 employees working for the division. They've made lots of different acquisitions. I think I've counted 16. I suspect there are some others as well. The biggest of those acquisitions was LifeWorks. That was a deal that was completed last month. So in US dollar terms, it's over $2 billion. And the impact of that latest acquisition should see revenues exceed $1 billion in 2022. So that makes it almost 10% of Telus's total revenue in 2022. It's also interesting to see the sort of services it's getting involved in. Many of the acquisitions that it's made have been of medical records companies, but it's also got solutions for doctors, for pharmacies, it's got billing solutions, it's got solutions for remote consultations and so on. It's trying to provide a really wide range of health IT services, both with its own assets and it's also got a series of partnerships. There are also some perhaps slightly tenuous links with telecom services. So all business plans from TELUS also include their virtual care, so the remote consultation, that's included in the bundles. Consumer plans also include these doctor consultations as well in some parts of Canada. It depends on the local insurance, but they are included for some customers. The investments in healthcare also give it some scope to expand internationally. So some of what they've done is unique to Canada. So I think a lot of the investments in things like medical records companies are really local, but some of the other solutions could be sold anywhere. So LifeWorks, that company that it's just bought, 40% of LifeWorks is 40% of LifeWorks revenue is outside of Canada. Most of that in the US. The point of going through TELUS Health in a bit of detail is really twofold. Firstly, it's just to illustrate that there are options for operators to explore other opportunities that really substantially change what their business is and that add significantly to revenue. Like I said before, like it says on the slide, this is going to be almost 10% of TELUS's revenue in 2022 and growing beyond that. The second point is just to say that while these different options exist, the commitment required is probably going to be too much for most operators. Most just don't have the desire to be this radical. Being a digital health business is clearly very different from being a telco. And while there are some synergies like bundling health into mobile plans, you do have to look fairly hard to find them. Most operators, I just don't think, are going to be anywhere near this sort of radical. They're not going to have any sort of ambitions this radical in their growth plan, and they should probably be honest about this to themselves and to investors. Now, with that in mind, I want to turn to the final area and where operators are quietly having some success, and that's the opportunities in the business market. Now, I mentioned earlier that the business divisions of operators, they've done a good job of expanding their IT services, and some of these services are listed on the right-hand side of this slide. So cloud, security, IoT, SD-WAN, and so on. There's plenty on what operators are doing in our research. We've written about all of these topics, so you can get them through the research portal. We also see plenty of new opportunities emerging to add to that well-established list. So private networks, edge, the expansion of SD-WAN to include SASE and into SD-LAN, so going into products like managed Wi-Fi. Now, there's a separate session where Michelle McKenzie is going to talk about private networks. I won't talk too much about that, and I'll talk about 5G APIs in a minute. But I think the key point on this slide is to say that the operators have found a way of selling these other services and aggregate them with connectivity. But there's plenty of mileage. There's plenty of other things that they can also do. So just to go through some of the reasons why operators are finding success in the business market, I've listed some of these on the left-hand side. So firstly, the operators have existing assets to exploit. They've got existing strengths. They've got their obviously large customer base. They've got channels to market and so on. There's also strong demand from businesses, both for new products and for a simpler way of buying them. So if you just take one category here, security, any reasonably sized business is probably buying at least 20 different security products, and they don't want to buy that or manage that separately. They really want to reduce the level of complexity. And we see this time and time again in the surveys that we do. There's a real want from businesses to reduce all of the complexity with all of these IT services. And as we've shown at these events in these presentations before from our other survey work, operators are really well positioned to take advantage of that demand. Where operators are doing a decent job with serving customers with the basic connectivity products, they're very well placed, and customers will consider them as suppliers. So all of that means that it's a relatively low risk for telecoms operators. There may be some technology work needed to be done, some integration. But the basic services are provided by others, by other vendors, by Cisco or Fortinet or one of the hyperscalers or whoever. So it's not that operators have to invest too much in developing new solutions. And just the last point on the left-hand side, in many cases, operators aren't chasing new money. So businesses, they already have large IT budgets for things like networking and security, and often these budgets are increasing. But the key thing is how these budgets are changing, particularly as more services move to the cloud, And as I mentioned before, as businesses look at trying to simplify how they buy these different services. Now, all of that favours telecoms operators. And this isn't just theoretical. It all sounds good in theory, but we can see from the numbers of different operators that they are seeing real success. So if we move to the next slide, here I'm showing the results for Orange. So until the end of 2021, it very helpfully reported its total business revenue, and it also showed the IT, what they call IT and integration. They showed the share of IT and integration as a total of the business revenue spend, or their revenues. So you can see here the line showing IT services as a percentage increasing. Now, obviously, this data is for Orange. It's fairly typical for other operators. So back in 2017, IT services were just over a quarter of Orange's business service revenue, so 27%. Today, that figure is more like 43%. And if this trend continues, as we expect it to, IT services could well be worth more to Orange than the business revenue from connectivity and voice. And as I say, other operators are reporting similar sorts of trends. Also on this chart, I put some of the acquisitions that Orange has made to support this growth, mostly a mixture of cloud and security firms, but also one, Innovacom, which is more of a healthcare, focused on the healthcare sector. In total, Orange has probably spent over $1 billion on these various deals, so sort of the equivalent of about 2% of annual revenue, which is obviously a lot of money. But if we compare it to TELUS, it's far less than TELUS spent on healthcare firms, both in terms of absolute numbers. As I said, TELUS has, I think, spent over 4 billion. Orange is probably about 1 billion. So in terms of absolute numbers, it's obviously much less, but also as a percentage of revenue, it's a relatively low risk. There are also, I think, much clearer synergies for Orange between its traditional core connectivity business and these IT services. As you said before, this is mostly a cross-sell opportunity, so there's much less risk than entering a new business areas. All of that said, Orange is obviously one of the more aggressive operators, and it's looking at international opportunities as well as those that it has in its own network footprint. So yeah, it's probably one of the more aggressive operators, but we've seen operators, almost all operators with large business divisions, follow a similar strategy over the past few years, with trying to get more into IT services, cloud, security, often supported by acquisitions. But the last point I wanted to make on this slide, though, is that even though Orange, the growth in Orange's revenue has been helped by acquisition, it doesn't seem to just be a one-off lift from caused by these acquisitions. Post-acquisition, we're also seeing very strong growth, strong continued growth. So in its most recent results, it reported that security revenue had grown in the last year by 13% and cloud by 15%. So it's seeing strong continued growth from those new areas. Now, I've already mentioned 5G a few times during the presentation, both in relation to new services, but also in relation to private networks. We don't see the introduction of 5G standalone networks as transforming the fortunes of telecoms operators, but the new services enabled should be a way for them to add extra sources of revenue. But while we think there's been a lot of attention over the past few years on the network technologies, I think too little attention has been placed on how to package and how to sell these capabilities that the new standalone networks will enable. What I've tried to do on this slide is map out what a customer or of the 5G APIs, so a developer or enterprise, what they could want to have. Now, from today, from companies like Twilio or Vonage, so this is our view of what the Vonage communications platform could be. So from companies like Vonage, developers have access to things like messaging APIs, voice APIs, video APIs. So it means that it's relatively simple for a developer to program an app to send an SMS. They just need to add a few lines of code. Now, I think the same basic idea could be true for 5G and 5G services in future, but with a much extended, much wider range of capabilities, which we tried to show on this slide here. So if you think of a device with maybe an eSIM or an iSIM embedded, the device may not even have a permanent connection to a network, but the developer may want it to have an ad hoc connection. and to use that connection for a data service with guaranteed characteristics, maybe guaranteed latency, guaranteed throughput. So the range, the complexity of the service, potentially also its short-term nature, will mean that developers and the telco will all they want to manage this manually. It will just be too complex to manage manually, too many different characteristics to handle. They want it to be managed through a set of APIs using a standardized, a set price list. So basically, we're talking about selling telco services, selling and consuming telco services, much as the way as AWS features are sold today. Also, probably developers, they don't want APIs to be specific to an operator or a country or a network vendor. They would want the developer would want the same services across all different combinations of country and operator and network vendor. We'd also expect an operator to be able to charge more. I mean, I think it kind of goes without saying, but the underlying assumption is that an operator could charge more for services where you've got different sorts of guarantees, whether you're guaranteeing throughput or latency and so on. As I said, there's a separate session that Michelle Mackenzie's doing on private networks, but we can see, I think, from the initial success of those private networks, and in her session she'll talk about the growth, the really strong growth that we've seen in those networks. But I think we've seen from the initial success of those private 5G networks that the demand is very high for high quality connections. It's not just a theoretical idea. And the types of use cases that the networks are supporting, things like fully automated factories or ports, they're things that we've been discussing for years now, but they're actually happening, at least in private networks. What we want to be able to do is to be able to support the same sort of services on public networks. And I think that the demand for the private networks helps to support the idea that there will be demand for these features. Now, we are seeing 5G standalone networks launched gradually. So of the 220 5G networks that there were around the world at the end of June 2022, 27 of those were standalone. So it's still a fairly small share of networks. And it's probably not going to be until the second half of the decade when 5G standalone networks are mainstream. But operators will need to be ready with an offer for these sort of APIs, and we don't see much sign of that happening yet. I mean, there are various initiatives with the GSMA. I think it's behind Ericsson's acquisition, the $6 billion acquisition of Vonage. I think they're trying to create this sort of platform, but still more work needs to be done. If that work isn't done, then all of the capabilities of the 5G standalone networks, they'll either be only available on a standalone basis, on a kind of case-by-case basis, with customers buying those services for an individual product and negotiating with an operator on an individual case-by-case product, or it'll have other restrictions, like the service will only work on one network or on one operator in one country. Now, that may be acceptable for a narrow set of applications, but it's not going to help operators support much broader sets of initiatives. So things like gaming and metaverse and even healthcare that would need access to a standard set of 5G APIs across multiple networks of countries and so on. So we have already written papers on 5G opportunities, talking about B2B, and it's a topic we're looking at, and there'll be plenty more coming from us in the next few months. So let's just conclude, wrap up with some recommendations, or where we see growth coming from. So first of all, in the consumer market, we think there are incremental opportunities in the connectivity market. As you showed very early on, the penetration of the very large mobile plans or the very high-speed fixed plans suggests there's still quite a lot of growth there to upsell customers to higher speeds or bigger data packages. Longer term, though, I think the strategy needs to be one of, like in the business market, of aggregating different services. The second option for operators is to take that more radical step into new verticals. This won't appeal to most operators, but we can see from what TELUS did and a few others that at least it is a choice that is open to operators if they're willing to be that aggressive and go into those different markets. The third area is the focus on business. Here, really, the recommendation is for operators to keep on doing what they're doing. We've seen them have a lot of success already in things like cloud and security, and there's plenty more opportunities in things like SASE and edge and private networks for them to continue growing those B2B revenues. So with that, I will wrap it up and hand you back to David. David, over to you.
Thank you, Tom. Thank you very much for that informative presentation, and thank you to everyone who has tuned in to enjoy it. Before you go, I'll just remind you of a few key points. You can still download and access the useful resources. You can still submit a question to Tom or his team, keeping in mind that they will reply in the coming days by email. And lastly, I'll just remind you that you'll be automatically redirected to the event homepage in just a moment, where we would welcome you to tune in to another session. Thank you very much, and we hope to see you again soon.